which you're usually going to see after a fake TC, right? Or maybe even an inducement taking out the low. If there is no liquidity, then you got to wait a little bit more. Like, let's say, for example, we got like, say we had a demand zone, the market has pushed away, we're coming back down, and then the market like starts to form this, takes out equal lows, but then it does this, right? And maybe even cause a trend change. So do you think this liquidity grab below right there is strong? No. Why? Because it's still building this flat lows, and usually what happens, takes them all out, then it makes you the momentum push, and that is when you get the trade. Okay, so if you don't have momentum after a liquidity grab, then you are probably going to become the liquidity. Okay, so wait for momentum. And again, the stop hunt, those are the BFI launching their fake orders in order to take out the traders' stop losses, right? And then usually they're going to go. So a liquidity grab is actually a very good place to enter trades, right? It can be retested, but it should not break. Because again, if you have that same scenario of the previous lesson, if you have a range, the market makes a massive buy and then it sells off, right? So this is your flat highs, flat lows, manipulation. This is the fake move, okay? So this is where the banks bought in order to sell. They are going to come back to retest to close the orders, but very rarely they're going to break above this zone, right? So if you actually spot a liquidity grab, okay, it is a very good place to enter your trades, place a stop loss above, and you are good to go, okay? And again, liquidity grabs are on all time frames. The concept is also fractal. You can have liquidity grabs on the weekly, daily, 1 minute, 15 seconds, right? Again, you just need to systematize it and keep it on the time frames that you're using. So a liquidity grab on a hard time frame, like the 4H or the 50-minute, will signify that a strong zone is created, right? So if you have like a supply and demand zone that was made by a liquidity grab, it's very strong. What I mean by this is, again, similar example. You have like a downtrend, the market makes a little range, sell to buy, right? So you have right now a trend change, you have a demand zone that was made by grabbing liquidity below flat lows, right? So this is a very strong zone created. If we come back right there, the chance of us pushing higher is big, okay? And also liquidity got on the lower time frame, which is the 1 minute pyramid. This signifies liquidation, which stops out early buyers and sellers. Understanding liquidity can increase your win rate by a lot, because if you just wait for the liquidity to be grabbed when it comes to your entries, right, your win rate is going to increase. Okay, so make sure to also include liquidity grabs in your plan. Therefore, so decide on which liquidity points you're going to be using after this lesson, right? Add them to your strategy, and then again, always wait for the liquidity grab, else you will become the liquidity. So if you're getting a lot of stop losses, if you are having those situations in which you take 1 loss, 2 losses, 3 losses, and then the market moves in your direction, right? Or you get a stop loss and then the market just massively plummets in your direction, then you are not utilizing liquidity in the right way, okay? So right now we're just going to jump on the charts. Of course, there are some other additional concepts on liquidity. One of my favorite one is the Asian range. I have already a video on that, right? So we have like the daily profiles as well. Usually like the Asian session high, the London session high and low, they're going to be becoming liquidity. So that is also other types of liquidity that I'm covering in the program. And we have the Asian range, which we have 4 profiles. So again, make sure to check out my Asian range video, which is going to expand a little bit more on your liquidity understanding. So right now, I just want to go on the charts, show you a couple of examples, show you how you can actually train your eyes to spot liquidity, and hopefully it's going to make sense so you can go on your own and practice identifying liquidity. All right, so we are on the charts right now, and I'm going to try to show you how you can potentially spot liquidity. I'm first going to start with a stop loss I just took because I was a victim of liquidity and not actually following what I teach. So let me start with that, and then I'm going to show you some good examples. So today I took a long on Euro USD, right? And on the 40 time frame, we are a little bit high. Okay, so I'm not looking on the left, what is happening on the left, right? I'm just focusing on what is happening right now. But I was mainly focused on the 50 minutes. So today was a great example of taking out an old high, which is also known as previous daily high. Okay, so this is also a form of liquidity, right? Which is considered an old high, right? Which is the previous daily high. So in this case, this was the previous daily high. This was also paired with the Asian high, which is also liquidity, right? This is also paired with liquidity that is resting just in the opposite direction. Like look at this flat price action. This is all flat price action, right? This is all potentially going to get taken. So what happens is on Around Frankfurt Open, the market does this. Okay, but again, according to me, what I told you, like one of the drawbacks with the way I trade is that I follow structure. According to me, again, at that time, this was not a liquidity grab. This to me was again a continuation, but I was aware, and I also shouted this in my morning analysis. We took that trade. It was a stop loss, which is fine. But again, we took out previous daily high. We took out Asian high with lots of momentum. The liquidity grab happened with lots of momentum. We consolidated for a little bit, and then we just started dropping. But I also want to show you how I also waited for an extra liquidity. Okay, there is my demand zone. What did I told you? What did I tell you about that liquidity on the left, right? Drawing this demand zone, the market reacting, flushing. Drawing this demand zone, the market reacting, flushing. Okay, so what I was looking for is for this to be taken. What we also had, what is this, guys? Right, so this is a trend change, right? So this, according to me, was a fake trend change. What is this? This is flat price action right there. Right, the market pushed up and then it just started massively rolling down. And I said it in the community, this one is gonna reverse. Okay, but still a setup is a setup. Okay, we grab the liquidity of the fake TC, we grab the liquidity of that structural liquidity on the left, and if you really zoom in right there, this is where we got our actual TC, and the trade was taken from here. Some of my members placed the stop loss below. I personally below like the major zone, I personally placed it right there, and that was a pretty quick stop loss. Right? Why? Well, because the market grabbed macro liquidity, right? And it was gonna retrace on the way back down. Okay, but you can see how I waited for the structured liquidity to be taken, for the fake TC, and also for these flat lows. Okay, so this trade was valid according to me because I had all the liquidity grab rules ticked. Okay, so this is one way you can practice liquidity. Okay, you can go on your charts and have a look what happens after we take out major highs. What does happen after we take out major lows, right? Like let's have a look at the previous day. Right there, what we have is an overall bullish market. Okay, where is our old high? It's right there. So we can later explore like what happens. We get a pullback, but then we still continue to push higher. Okay, so look what happens right there. What is this type of price action right here? It's very flat. Okay, and not only that it's very flat, but it's also the Asian range. So again, liquidity is going to be below the Asian low, right? And of course, below all of these flat lows right there. So for example, all of this right there is flat, and you can see where the flat price action starts. This is where we came in to take it out. Okay. So technically what happens is we went on to retest this zone, which is the zone that potentially formed the 4-hourly higher low formation. So this is more advanced. I call this TCOBs, right? This is a bit more advanced. We tapped in right there. Okay, so liquidity has been grabbed below the Asian range. Liquidity has been taken here. Liquidity has been taken there. Okay, but this is the 15-minute time frame. So what I want you to do is to draw 15-minute zones or 4-hourly zones and then drop to a time frame lower to actually see what is happening. Okay, so right there, I'm gonna drop on the 1 minute. What do we have just before we tap the zone? Right, we have flat lows. Right, flat lows, but this hasn't even tapped the zone. Massively pushing to the downside. What is this? It's potential liquidity grab. But again, I have a very important rule, right? That liquidity should not happen like I have